Thank you for joining us for Peace on the Lower East. In this webinar, hosted by me, David Helbraun, landlords and tenants discuss how to work together to survive the COVID crisis. Renowned chef and restaurateur John Fraser and landlord James Wacht openly and frankly discuss the big issues and hardships faced by landlords and tenants due to the closure of restaurants and bars in New York City. We cover landlord and tenant business models, the bank's role in commercial leases, rent negotiations, percentage rent deals, and other ways to move forward so both sides can make it to the other side. I hope you enjoy the webinar.
Welcome, everybody. It's good to hear from you. I wish I could see you in person. I always love doing these in the office and getting to hang out with everybody. It's one of the highlights of my week always. But we're here today to talk about some things having to do with landlords and tenants. The name of the webinar is Peace on the Lower East, and it's meant to be a summit between landlords and tenants. We are so deep into it with landlords at this point, and we're talking to them about the future, and we're talking to them about what we as tenant attorneys and tenants can do to keep our businesses alive. And the impetus for this webinar was that I was finding we weren't understanding each other. I would talk to landlords' attorneys about the business models of restaurants, and oftentimes they were confused, or they would say their clients didn't understand. They understood, but their clients didn't. And the same thing with tenants. As tenants, we just think that the landlords are guys and ladies who just collect money, buy buildings, build buildings, collect money, and that's it. But there's a lot more to the story. And in the situation we find ourselves in today, both landlords and tenants are in a pickle. And it's nobody's fault. Landlords aren't collecting rent from people. They have mortgages to pay. Tenants are out of business, essentially, waiting for this crisis to end. So the goal of today is for us to learn about the other side, for landlords to learn about tenants and what it takes to run a restaurant, the business models of restaurants, how they make their money, and for tenants to understand the landlord's position and how a landlord runs their business and the pressures that they face being a landlord in New York City. And the hope is, at the end of this, we can understand each other better. And so when we're sitting at the negotiation table, we have some empathy towards each other, and we can work together for once and try to make it through this thing in one piece and in business. And then when that happens, we can go back to fighting like cats and dogs. Everything will be fine. So I want to introduce our panelists. I'm just going to say a couple of words about them, and I'm going to let them speak. First, we have Jim Wacht. He is a landlord. He's been in the real estate game for 35 plus years. You can't tell because he's a very young looking, handsome man. And he's got a lot to say. He really understands this business from the inside out. So Jim, why don't you introduce yourself and say a couple of words?
Sure. So I'm Jim Wacht. I'm a native New Yorker. I grew up in Manhattan, lived here my entire life. I love our city. I started my career as a lawyer, spent 8 years as an attorney, and then I joined AA, Attorneys Anonymous, where I went through the 12-step program and decided to become a businessman. I then joined a real estate company and have grown that company now from 6 people to over 100 people. We do a lot of different things. We manage a lot of real estate, so we act as landlords and managing agents. We deal a lot with tenants, retail tenants, office tenants, residential tenants, but I'm also a tenant. I own a business with my son called My Gym, which are kid indoor activity centers. We have 2 locations in Brooklyn, and we also have 28,000 square feet of office space. So I'm also a tenant there. So I've seen all sides. I understand all sides. I'm also a lender. I've lent money to people. So I understand what it takes for a lender to give relief to people. So that's really my story.
Thank you. Thanks, Jim. And our other panelist is chef and restaurateur John Fraser. John owns some of the best restaurants in the city, Michelin-starred Nick's. He owns the Loyal in the West Village, and 2 or 4 restaurants in the Times Square edition. He's opening up places all over the country. John, you want to say hello?
How are you? Thanks for having me. We have a couple of projects that are in development and a couple of paused developments as well. I think another piece of this conversation may be about things that were in development and we're supposed to start collecting rent at a certain time and won't be able to because of the pause, and how that might kind of affect the overall. I also want to take this 1 second to thank Team Helbraun and David in particular for the daily shout out emails and kind of updates in this kind of vacuum of leadership where there's no real North Star. I think for those of us kind of hanging out, it's on a limb, feeling like we're flapping. It's been really helpful. So I think that's an important piece. And I'm sure a lot of the people on this webinar would agree that those are beacons for us, and we really appreciate that. So thank you.
Thanks, John. I appreciate that very much. Okay, so can you guys hear me okay now? Yeah, we're good? Okay. Let's go to the next slide. So this is what we're going to be talking about today. This is not going to be, by the way, like a slide-based show. We're going to be jazzy about it. We've got a general construct here, but we're going to go where the conversation takes us. But generally, these are the things we're going to talk about: landlord and tenant business models, current conditions facing landlords and tenants. We're going to get into lease strategies for landlords and tenants, what each side needs to ride out the storm. And then moving forward, at the end, we're going to talk a little bit more about some real nuts and bolts solutions to actual negotiation points and what we can come up with as a fair solution between the two sides. So when we're negotiating with landlords and tenants, we're coming up with solutions to the problem. So let's move on to the next slide. And the first thing we're going to start talking about is landlord business models. A lot of tenants, we just don't know what a landlord's about. And we're interested to know. We want to know what life is like on their side. So Jim, the first question I have for you is maybe you can give us an overview of what types of landlords exist in New York City.
So the spectrum of landlords is pretty broad. One end of the spectrum is the mom and pop, the person who buys their first building and buys it and likes to live off the cash flow. They like to collect the rents. And then maybe they'll buy a second building or a third building. And then you have the people who are more in the mid-tier. They now have a portfolio of buildings. They may own 10 or 15 buildings, and they continue to grow their portfolio. And then you have the larger developers and public companies. You have the REITs. And these are the big institutional type landlords that own millions of square feet of real estate. They have tremendous capital resources, good banking relationships. Sometimes they go to the public markets to raise money, so they have access to capital. The mom and pop generally do not have great access to capital. The mid-tier people are beginning to achieve access to capital. Access to capital is what makes our business function.
So talk to me a little bit about mom and pop. A lot of us have the mom and pop landlords, right? We know them personally. Maybe they own a couple of buildings. Maybe they own 10 buildings. Is that a mom and pop? And what does their business model look like? How do they make money?
So the mom and pop is pretty much, for those of you who have, let's say, a restaurant in the ground floor of a 5-story walk-up or a 4-story walk-up, that's pretty much a mom and pop landlord. I mean, there's some larger landlords that own a lot of that, but a lot of the mom and pops start off buying these walk-up buildings, and they may have 1 retail or 2 retail tenants in the base. And their business model is, I want to collect the eggs. I want to collect my rents. I want my rents to go up a little bit every year. I want to upgrade my building. I'll go in and I'll do the work myself. I'll paint the building. I'll upgrade the lobby. I'll upgrade apartments. I'll get better rents. I'll have a good relationship with my tenants. I'll know them all by name. And then what I'll do is maybe 3 or 4 years into my ownership of I've done a good job upgrading my building, I might go back to my lender and say, listen, my building's worth more today than it was when I bought it. So let's refinance my mortgage. And then they'll take some money out and they'll take that money and they'll go buy a second building, on and on and on.
Can you talk, let's
Go
stop there. Jim, let's stop there for a second. We hear a lot about refinancing mortgages, okay? Talk a little bit more about that, because that's an interesting moment in a landlord's lifespan, right? When they say, I'm going to refinance, take the money out and buy another building.
Correct.
Tell me how that works.
All right, so basically there are 2 ways that landlords make money on a building. One is through cash flow, which is basically collecting the rents. And the second way is through what we call a capital event. So a capital event is either, again, refinancing a mortgage or selling the property. So a lender will basically lend money on a building based upon what they think the building is worth. And the value of the building is very much dependent upon what the rents are in the building. So the higher the rents, the more a building is worth generally. So somebody who buys a building on day one, and let's say they have a rent roll of $200,000 over the year, and then let's say they replace a ground floor tenant that's been there for 30 years, it's paying nothing in rent with a nice restaurant, and they get, let's say they double that rent. Let's say they upgrade an apartment in the building, and instead of getting $900 a month in rent, they're now getting $2,000 in rent. Now they've increased the rent roll in the building. And they'll go back to their lender, and the lender will say, hey, listen, you've increased your rent roll in the building by 50%. So we're going to increase the valuation of your building significantly based upon that, and we'll lend you more money than you currently have on your mortgage because of that.
So the higher the rents, the better it is
the value.
for the landlord.
Yes.
So the landlord is oftentimes quite motivated for a number of reasons to raise the rent, not only for the rent roll, right, and the cash flow, but also to increase the value to get more money from the banks.
Correct.
Okay. And what about the mid-tier players, the players who have, I don't know, what would you call a mid-tier player? How many properties?
I mean, I would consider myself a mid-tier player. It would probably be owning or having interest in probably a dozen or more properties, having better access to capital, that is having good banking relationships, and maybe owning bigger buildings. So instead of the 5-story walk-up, you might start buying the 100-unit apartment building. You might diversify. You might start buying an office building. So the mid-tier guys are the ones who are now beginning to grow their portfolio. And what they'll do, it's not too dissimilar from the mom and pop. Again, refinancing a mortgage becomes a very important tool for them to utilize to realize the value on their portfolio. And what they might do with that money, they might either buy more real estate, or if they have now investors. So often the mid-tier people, unlike the mom and pop, may now start having investors. So the way they get capital for a deal is not just borrowing money, but they may pass the hat around to friends and family and say, hey, write a check, invest in the property with me. So they may refinance the mortgage and actually then distribute the proceeds to their investors.
That makes a lot of sense. And the big players, the Two Trees, the Vornados, the developers, if you could quickly just lay out their business plans and their goals.
Again, if you're a Vornado, you're a public company. Basically what you're trying to do is realize value for your shareholders, which again is upgrading your buildings. And, they have different business models. So some companies are what you call value players. What they like to do is buy underperforming real estate, invest capital in it, and then increase the value, and then either sell it or they'll refinance it and realize value that way. There are other people who looking basically just for appreciation. They'll buy a property in a market that they know it's weak, and they hope that basically the market will appreciate over time, and then realize value from that. But the bigger players, it's really hard to generalize what their business model is. It really depends upon the player.
Mm-hmm. And what about co-ops and co-op boards and condominiums? Where do they fit into this?
They usually fit in the insane asylum. So anybody's ever done a deal with a co-op, understands that you're dealing with a bunch of lunatics and they're running the asylum. So, you know, we've done it. So we're also a brokerage company. We have 80 brokers and we do a tremendous amount of representation of tenants and landlords. And, you know, our worst assignment generally are the co-ops because, again, it's the lunatics running the asylum. Basically, the co-op isn't looking to refinance the mortgage and take money out that way. Generally, the retail space in a co-op, and I'm thinking usually like a 50 to 100 unit building, the retail space is there to generate income for the building and help offset the common charges or the monthly maintenance charges that a tenant shareholder has to pay. So they're looking for income.
Okay. How much cash do landlords keep on the side for certain incidents like vacancies, like we may have coming up and we have now certainly in certain areas of Manhattan? Do banks force them to leave money on the side?
Some banks do, depending upon the deal. So if the bank looks at a deal and they think it's a risky deal, so let's say there's a lot of what we call lease up risk in a deal, that is the building is gonna have a lot of turnover. Often you see those office buildings and the space has to get re-tenanted and there's a lot of transaction costs associated with that. What a lender might do is set aside money out of the loan proceeds that'll be applied towards the capital expenses associated with lease up. So they might set aside money for that. Or if the building anticipates having significant capital improvements, a new roof, maybe upgrading the common areas, maybe a new lobby, maybe putting on an addition, the bank may set aside mortgage proceeds against that. So as the work progresses and as the landlord completes the work, they can then apply to their lender to take money out of that reserve. Smaller deals like the mom and pop deal, not so much. They don't tend to reserve money. What they might do, if the building has a lot of violations, they might put money against that until the violations are cleared. Smaller mom and pops tend not to put a lot of money aside for the rainy day. More sophisticated landlords try to do that. We have a building that we own and we've owned it for a period of time. And what tends to happen, we have investors in it. What tends to happen over a long period of time, you know, investors pass away. Now suddenly you have 3 more investors who are their kids. And suddenly instead of having 10 investors, you now have 40 investors. The last thing you want to do as a landlord is have to go back to your investors and do what's called a capital call. A capital call is when I send a letter to my investor and say, hey, guess what? We need more money. Investors, unless it's part of the business plan, don't like that. And the problem when you have a lot of investors is trying to get them write checks isn't so easy.
Yeah,
so you have a question.
I can understand that.
But so in a building like that, so we have a building like that, we have a significant reserves set aside. So we never have to have a capital call.
Right. Tell me what's happening now with landlords. What kind of hardships in their world are they facing now that most tenants are just not paying them rent? What's going on with them? What kind of discussions are they having amongst themselves and with the banks?
So I'll break that down. So first, the discussions we're having is, first of all, how do we respond to our tenants? So one thing we started to do at the beginning of this crisis is we sat down and we looked at our rent roll and we said, what is the likelihood that this tenant's going to ask for relief? What is the likelihood this tenant's going to go out of business despite relief? And how strong financially is this other tenant? And if they ask for relief, do we really think we have to give it? So we tried to handicap what that outcome would look like. Now we're getting the requests from the tenants and we look at, you know, it's really hard to generalize how you're going to approach the tenants. Every tenant has to be treated differently. And a lot of it depends upon the circumstances of the building. So if you have a tenant whose rent is a significant part of your rent roll, you have to deal with that differently than a tenant that, let's say, is a small tenant in the Empire State Building.
And how would you
then
deal
they
with
don't
that?
move the needle much.
And Jim, how would you deal with that tenant differently? We have a lot of people watching here today who are in that first category, right? Their restaurant is a commercial space that means a lot to the landlord.
Exactly. So I would want to start a dialogue with that tenant. And what I would urge every tenant is start the dialogue with your landlord. When I deal with tenants, if I have a tenant who's dealing with me honestly and openly, I'm much more likely to be accommodating that tenant than a tenant that basically doesn't reach out to me. If they try to play hardball, that's difficult. So in certain circumstances, the tenants have all the leverage right now. If they're paying 50% of the rent in the building, the landlord needs that tenant. Now, that's particularly true in a building where there's a large mortgage, because if there's a large mortgage, then the landlord has to pay that mortgage, and he needs that rent to pay the mortgage. And quite frankly, some mortgages have what we call covenants in it, operating covenants, that basically say each year the lender will look at a building and they'll see how that building is performing. And if the building is not performing well, even though I might be paying my mortgage on a current basis, the lender could still say that building is in default of a covenant in the lease, that they haven't maintained a high enough rent roll.
And so tell me a little bit more about what is happening right now with the conversations between the landlords and their lenders. Because there's been no relief from the federal government. There's been no tax relief from the local government. Tell me what do those conversations look like?
So we've had actually a couple of conversations with lenders on buildings that we own and lenders on buildings that we manage. And, the lenders are nervous. The lenders are still trying to figure this out. Again, let's just realize this only started happening a couple of months ago. And so we're really only like in the first or the second inning. And people are still trying to figure out how to respond to this. Lenders operate in a highly regulated environment. And so they have to be very cognizant of what the regulations are. And if lenders start writing off mortgages, that if they start treating a mortgage as if it's in default or might be in default, then they have to start setting money aside against that. And lenders do not like to do that. So lenders are going to try very hard initially to try to make sure that that loan does not look like it's going in default. So to give you an example of one conversation we had with a lender recently was, hey lender, this is what's happening in our building. And we were very transparent. We showed them what we thought was going to happen. We showed them that stress test that we performed. And we said to them, we're paying a mortgage, and our mortgage payment, our monthly payment, has two components to it. And this is typical of a lot of mortgages. Mortgages have an interest payment, but they also have amortization. So amortization is money that goes towards paying down the principal of the mortgage versus the interest payment, which just goes towards paying the interest. And we were fortunate in the mortgage that we're talking about, there was a lot of amortization going on, because the way amortization works, the older the mortgage, the more amortization there is. So what we said to our lender was, listen, this is what we'd like you to do. Turn this into an interest-only mortgage, no amortization. And in effect, what that did is it reduced our monthly payment by about 20%. And that was meaningful to us.
So the banks they're starting to understand, right? They're starting to understand the plight of the landlord, and they're starting to help you out a little bit where they can, right?
Yes.
Okay. I have one more question for you about this topic. And then, by the way, if people want to ask a couple of questions, we'll take a few questions, and then we're going to talk to John about tenant models. A question that I hear from everybody, clients, family, you name it, is why do landlords allow spaces to stay vacant for so long in New York City? What is behind that?
I love that question. I get asked that question all the time at cocktail parties and whatever, and people look at me hostilely when they ask the question. So you have to understand the difference between cash flow and value. So we talk about how leases add value to property. So let's say I have a rent. I'll give you an example. So if I have a tenant paying me $100 a foot in rent, that translates into value. And what's the value? I'll make a real simple example. Let's assume I'm an investor and I'm buying a property and I'm willing to buy it at what we call a 5 cap, which means 5% capitalization rate. That's the rate of return I want. $100 in rent is worth about $2,000 in value. So rent translates into a multiple of value. So if I'm a landlord and I think if I wait a year or two, my rents are going to go up $10 or $15 a square foot, that adds significant value to the property, far more than the loss of rent for a year or two. In fact, if you look at it, you could even say that it could take 10 years of not collecting rent to equate the same value that I would get not renting it for 10 years.
Yeah. Someone just commented, James, this is your cocktail party answer. It's it's pretty funny.
Thank you. It's not my cocktail party answer.
Okay. So basically, in short, they're waiting for rents to go up.
Yes, because the amount of value that it adds. It's a multiple of the rent.
Okay, I got you. Anybody have any questions for James while we're talking about the general business model? Okay, let's talk to John for a minute, or for 15 minutes or so. John, we have a lot of landlords watching. We have landlords, attorneys watching. We have real estate brokers watching. And I don't think anybody really, unless you're in it, understands the tenant restaurant model. Let's start with a softball question. How do restaurants make money?
Okay, we'll start there. So restaurants make money by, we basically have a multitude of platforms that we can sell things, right? Retail, in the restaurant, delivery. And all of those go against your costs. Some of them are flexible and some of them are fixed. And as it pertains to this conversation, one of the few fixed costs that we have in a restaurant is actually rent. Almost everything else as relates to cost is based on our business levels. So we have a very busy evening, we need X amount of staff. We have a very slow evening, we have X minus 5 staff to run the same restaurant. And then as we go down the line, we start to say that there is actually a minimum amount even of the unfixed costs as it relates to a restaurant. But in theory, if my food cost is 30%, it's 30% whether I'm very busy or I'm very slow based on menu engineering. However, the rent remains constant whether I'm busy or slow, which I think dovetails into the conversation around how New York has changed over the time that I've been here. I've lived here for 16 years, and I've been a leaseholder since 07. So I was on the back end of I was very green on the first sort of down cycle and recovery, and now I have a little bit more of an understanding of how things work. But still, this is one of the most daunting moments I think any of us has faced.
John, what are a lot of landlords, they walk by the restaurants, they try to get in on a Saturday night and they see a line or they see a lot of hustle and bustle and they think that restaurateurs are making a lot of money. Yeah. What are the these days, what are the profit margins and how has it changed over the last couple of years?
Sure. If on a standalone restaurant, I haven't written a pro forma that gives more than 10% to the bottom line. So 10% profit. The pro formas that we write for, hotels and other licensee deals can be slightly higher because of the number of bars that we have, right? So typically for instance, Nick's and Loyal specifically, right? We have co-ops as well as community boards and the SLA, which restricts the amount of bar seats that we can have, restricts the amount of hours that we can serve alcohol, which is our highest margin. So we're basically up against the wall here where we're not allowed to necessarily kind of play around with how much booze, how many people can we get into a space, fire department issues and such. So we're really looking at 10%. I think it's probably around 8% now. This year, I would say we were probably writing it for about 8% based on the pressures of, minimum wage, increased competition, delivery platforms, which are, essentially replacing restaurants. They have replaced restaurants, thank God now, so people can still eat. But that landscape has changed quite a bit. And those pressures are starting to now choke down what was already pretty thin, right? If you were to pose someone, hey, you can make 10% profit, but you have to, 10% profit on a couple $1 million, but you have to service X amount of people, a very large group of people in order to get to that 10%, you'd be crazy to go into that business. It's becoming clear that it's even crazier now. And especially with this, it's like, who knows?
And how have those profit margins changed over the years? You've been in the game for a long time. You opened up Dovetail 13 years ago or something. So tell me about that scale and how it's diminished over the years.
Sure. Some of it has to do with things that are out of our control, like minimum wage, right? I would never argue against minimum wage. That's something that it should be a universal living wage. However, that puts extra pressure on the restaurant. And there's a cap at which restaurants can charge, most restaurants, right? If you saw a $35 chicken on a menu, you'd be like, what's happening here, right? So there's a philosophical cap that we can charge people. And yet there's pressures from the bottom, like minimum wage. There's also sort of, a very good example is the digital marketing, right? Which I have no understanding of, and I have to hire someone to do that, right? That didn't exist back when we first started. HR, law, which is quite a large expense now. Not throwing stones here, but not just the dealing with the kind of getting into a business and running it, but also the ongoing law bills, whether it be with HR and guests. And generally the landscape, during an economic boom, the landscape widens out, right? And we're in the middle of that economic boom. So increased competition means you have to spend more money to get a guest.
So understanding that margins have dwindled, right? There used to be a point where if you were really doing well and managing your costs, you could hit 15%. And that's a very different model than 8%.
We used to write it at 20. 20% was our model when we first, started opening restaurants. That would be a lie now.
And generally, when you're figuring out your models, what percentage of gross revenues can you allocate towards your commercial rent? So
we try to keep it below 10%. I think 10% would be on the very high end based on the other costs. However, for instance, if I was running a coffee shop or sort of a one bartender with a security guard bar, you could make more space for rent because your labor is lower. But the two largest expenses on the P&L, every one of my P&Ls, is labor and occupancy. Those are the two largest lines. The thing with labor is that it's actually under our control on a day-to-day. So if we don't hit our labor numbers, in theory, operationally, we've made mistakes. The rent, however, is a fixed cost based on, COVID or non-COVID.
And talk a little bit about how seasonality affects business. I know that that's changed a bit recently. It seems like summertime has become this just desert.
Yeah.
Is that what you're finding?
Yeah. I think perhaps I wasn't as aware of it back then, but there's become some great options of places to go outside of New York City, whether it be a couple hours away or again, in an economic boom and people have some cash in their pockets, they want to travel when they can. So what we've seen is a drastic reduction in revenues during the summer months. So we basically write off second quarter and try and stay alive, typically. As soon as school goes back in session in the third quarter, late third quarter into the fourth is when we really are able to ramp up. But I've said many times that, New York City has essentially become a seasonal business in the way that Montauk is a seasonal business. However, again, right, as it pertains to fixed costs, those are not reflected in our rents or in some of the others that don't change based on how much business we do.
Because we're talking about these tenant models, we have to bring in the idea of social distancing and how it's actually going to affect the restaurant business model. We're seeing things happening in Georgia, in the South. New Zealand just reopened stage 1, and many of these states and countries are starting off with a 25% to 30% occupancy rate. We think it's looking like they're going to ramp it up 30 to 50 to 70, maybe scale it back based on what happens with the virus and if there's more outbreaks. How do you imagine that's going to affect you as far as your revenue goes?
Right. The answer is we don't know. You know, we read everything that is available to us. We're watching, you know, Vegas and some of the other folks that are starting to put out guides on the way that they're going to be able to make their guests feel comfortable. But, you know, what I have a hard time with is that, you know, we're in the business of essentially selling the thing that we can't ask people to do, which is vibe, right? Get close to people and rub up against each other and have a good time. So, you know, I think that every person will kind of do the experiment of going out to eat at a restaurant during social distancing. The question is, what will be their spend, right? Will they drink, or will they drink not very much? What will be the model for how they pay their check, how they make an order, right? So we're in the middle of kind of, you know, flipping through all of the crazy ideas, and hopefully we'll find a good one. But really, the lack of density essentially begs the question of why go to a restaurant in the first place, right? So yes, get out of your house. Most of our restaurants are, all of them hopefully, are about good food, and good food is good everywhere. So hopefully that will be a piece of it. But, you know, you have to ask the question of how many people will be in New York City when we finally do open, right? Who haven't left. How much tourism will there be? Probably not much. And how many people can we serve per evening based on the square footage we're allowed? That's not a business, right? That's a lifeline. We're simply going to try, provided that we can work through all of our partners and landlords to make a sustainable deal, at least in the short term, to stay alive and to put our folks back to work. But that's going to take a lot of everyone getting on the same page, that being landlords, guests, and employees. You know, everyone has to basically get on the same page and say, this is the new normal for the foreseeable future, and hopefully make the best of it.
What do you think brings us to the new normal? Do you think it is the development and dissemination of a vaccine? Do you think it's a medication that's out there that treats it? Do you think we can ever get back to the new normal in the restaurant business before either of those two things happen?
Yeah, I mean, I think the other one, you know, I'm not a scientist, but the testing is, I think, is a big piece, right? Available and quick testing, I think, will help people alleviate their fear. But I don't see them, you know, the city ordinances putting down their guard until we have something that's really, you know, based on science, not based on anything other than. But, you know, all of that you mentioned, I think, would be a step in the right direction. I also think that data is going to be a big one. You know, when we find out how many people actually had it or have the antibody tests, and versus how many people got sick versus how many people passed. You know, if there's able to be information, I have no idea if this is true. If the information comes out that it's a very, very, very small piece, hopefully people will at least test the water of going out during social distancing. You know, there's two fears there. There's the fear that how will we stay alive when we can only feed 25 people at a time, right? And then there's the second fear of, what if people have no hope at all and also no money to go and spend in restaurants, and they don't go out at all? So it's not even 25 people at a time, right? It's like 5. I think that those, you know, the recession kind of correlates to this conversation as well as, you know, what does it mean to be in a market where there is a recession versus where we left, right? Which fall off a cliff.
I've been hearing some talk recently over the last few days that's been very interesting to me. And it's this idea of hibernation. I've also heard it been called mothballing. Basically, restaurateurs saying, let's cut the crap. Okay, this opening up at 30%, 50%, then scaling it back again once there's an outbreak. It's just not going to work. Why don't we just close the restaurant and just reopen and make it easier on everybody, and reopen when it's safe, when we can reopen as who we are and not have to be creative or a new normal, but just normal. You have thoughts on that?
I mean, you know, if I could get my landlord to cooperate with me and say there is no rent while you're closed, I'm pretty sure that's exactly what we would do. at this point, a restaurant is going to be essentially a soup kitchen, right? There'll be nothing to be gained by being in the restaurant other than the good food, right? Which can at some point be delivered to you, right? Maybe that's what we focus on while we're closed. But I'm still accruing rent right now, and I'm not open. So unless I could have cooperation from my landlord, which, as I'm starting to understand from Jim, would also need cooperation from a lender or bank partner, it doesn't make a lot of sense for us to open into what is this kind of idea of social distancing, right? None of us likes the idea, but it feels forced.
Jim, what is your take on that, this idea of hibernation or mothballing?
Well, I think John just hit the nail on the head. I mean, I got to pay my lender. And if my tenants are mothballing restaurants and have no money coming in, how are they really going to pay me rent? And besides paying my lender, basically for buildings in New York, 25 to 30% of my rents, what my rent roll is, goes towards paying real estate taxes. So I haven't heard anything coming from the city that they're going to give landlords any relief on real estate taxes. And in fact, the most recent tax assessments went up something like 4 to 8% for this coming fiscal year. So we're going to have a tax increase, a real estate tax increase starting this year, notwithstanding the coronavirus.
I've heard some numbers thrown around, like restaurants pay somewhere in the neighborhood of $5 billion a year collectively to landlords in New York City. What if the federal government came in and said, we'll cover that? It's $5 billion and you can all stay closed for a year. Do you think that would work?
Yeah, but that's fantasy land.
John, you think that would work?
I mean, why is it fantasy land?
Because I don't think the federal government would do that for New York.
Got it.
We have a president that hates our city, and we have a city that hates our president. He's not about to give us federal relief that's proportionate to what we're experiencing. And maybe if Joe Biden gets elected, he doesn't take office until January, so that's too far out.
Jim, I want to talk to you. We're going to get to a lot of people asking about percentage rents. We're going to talk about that a lot in a minute.
Dave, can I ask one question?
Sure.
You mentioned taxes. When you receive the taxes, we pay our proportion typically of real estate taxes, and where does the rest of the tax money come from, and how could that be made up if we stayed closed?
Well, the rest of the tax money comes from the other tenants in the building, from the rents coming in.
Right. But what I'm trying to say is you don't pay real estate taxes. Your tenants pay your real estate taxes.
No, absolutely not.
What's
I pay my real estate taxes. So here, for instance, residential tenants don't pay any real estate taxes. They just pay a fixed rent. So there's nothing in their lease that provides that they pay any percentage of real estate taxes. The other thing is most tax clauses in leases that I'm familiar with for retail tenants provide that tenants pay a share of the increase in taxes over a base amount. So that base amount isn't being covered by anybody other than the landlord. Got it.
Thank you.
Yeah.
Jim, talk to us, because you've been around a couple of different crises. Talk about 1987 and that crash, and 2008 and that crisis and that crash, and how did it affect commercial real estate in New York? How did landlords deal with it? What happened to rents? Sometimes it's helpful to understand the past.
So 1987, when the stock market tanked, it didn't really impact the real estate business for about another year, and that's not unusual. The real estate market is not exactly in lockstep with the stock market. It tends to lag it, partly because real estate is very liquid and changes happen very slowly. But starting in 1988, the market started getting impacted, and got impacted very, very severely. I actually was a lawyer up until 1989, and I got into the real estate business in 1989, which, if you could have picked the worst possible time in the history of humanity to become a real estate business person, that was probably it. And what I saw, basically, people would say to me, what's your job? What do you do now? And I would tell them, I'm in the distressed tenant business. We managed a lot of buildings that had retail tenants and office tenants. I literally spent from 1989, when I got into the business, until really 1994, when we began to come out of this. renegotiating and restructuring leases to keep my tenants alive. I mean, that was what was happening. What I saw generally in New York was a huge number of foreclosures. Buildings were getting foreclosed left and right. Banks were coming in and taking them over. I would go to these bankruptcy auctions and watch buildings get foreclosed. So a building, just to give you an idea what the numbers were, there were a couple of auctions for these Flatiron buildings that today are like golden. They were being sold for $30 a foot. That's what they were selling for. Today, rents in those buildings, office rents are like $60 to $70 a foot. Just gives you an idea how much that value went down. And the reason for that is there was what we call no liquidity. Nobody wanted to invest in real estate. Banks were not lending against real estate back then. And because of that, the values went down drastically. If there's no money to buy real estate, the values go down. The economy was in the toilet. People lost tons of money in the stock market. The unemployment rate was skyrocketing, and businesses were going out. That was the worst I saw it. The 2008 downturn was not nearly as severe. It didn't last as long. It only lasted about 2 years. And you saw a little bit of the same thing, businesses going out, but because it didn't last as long, the long-term impact wasn't as severe. And then when you talk about what happened in 9/11, 9/11 was a blip. Within 6 months after 9/11, New York City had come back strong. I mean, one thing about New York City, it is resilient, partly because our economy has become more and more diversified. Having a diversified economy helps us be resilient.
You talked about landlords and how they were restructuring rents. Let's jump into today's crisis. And can you tell us from a landlord's perspective, kind of what is the prevailing strategy today? And I understand that things are going to change based on reopening and vaccines and everything else. But as we're sitting here today, Tuesday, what is the general strategy of a landlord and how they're going to deal with their tenant when they're not being paid rent?
So there are a lot of different strategies. The first strategy is to get as much information from your tenant as you can, so you can make a reasonably intelligent assessment as to what the likelihood is that that tenant's going to survive. So what I ask all my retail tenants to do, and some of my office tenants, I want to understand how you see the world. What is the likelihood that you're going to be able to come out of this? What is your new revised business plan? What is your source of capital? Because you can't just
Jim, how can you ask a tenant what their business plan is when there can't be one yet?
There has to be one.
John,
you've got to think it
John,
through. You can't just
no.
You can't just sit there and say I'm helpless. I have no idea what I'm going to do. You've got to have a plan. You have to have several plans.
Hold on, John. Is there a way to have a business plan now?
I mean, to say that we have a plan is to just say we're studying a multitude of different options. There is no plan. I mean, I don't honestly understand where you look. I mean, we applied like everyone did for PPP, did not receive yet anything, right? That would have been the start of our plan, right? Which would have gotten us to the 30th of June, right? I think, yeah, I mean, what I was going to ask you, and I think you answered the question, which is, so what would give you confidence? You're asking about your tenant's plan, right? Because you're trying to get information of whether or not you think they're going to last through this, right? Whatever this is, whether it's through fall or through 18 months from now, we really don't know. But what information would give you confidence that you should renegotiate the rent to something that is, sort of uncomfortable for both?
What would give me comfort is a feeling that you have a capital source that'll help you. That capital source can be, again, getting a PPL loan, knowing that you have money coming in, that you have investors that are going to stand behind you and have confidence ultimately in your business that they might be willing to write some checks to help you get through this. The burden can't fall 100% on the landlord. There has to be an expectation that your tenant's going to be willing to put some skin in the game as well.
I agree with that. My question is, though, so what if they come to you with a plan that doesn't satisfy you, right? And what if they say, we don't have much money? or we have the minimum amount of money that's going to take to restart. I mean, what are your options at that point?
My options are pretty meager. So the one thing I am doing as a landlord, I am talking to tenants about, hey, maybe we can apply some of your security deposit towards a rent payment right now.
Sure.
So maybe what we do is we structure a deal where we'll give you, let's say, some rent relief, maybe 50% rent off, and then we'll apply your security deposit to the other 50% with an obligation at some point in the future that you have to reinstate that security deposit, which is sort of a deferral. I mean, that's one way of dealing with it and get some cash flow in it. So if I'm a landlord that needs the cash flow, not every landlord will need the cash flow from their tenants, but from at least from the retail tenants. But if they do, then this actually helps both. Go ahead.
So we're in the middle of a lot of these negotiations. And what we're asking landlords is to work with us for the time being. We are oftentimes asking them to abate the rent and use the security deposit, like you said. From your perspective, what do you think a fair ask is? Do you think 50% of a rent abatement while we're going through this together is a fair thing to ask from a landlord?
Is it fair? Yes. Is it achievable? It depends upon the circumstances of the landlord.
Say more about that.
You have to understand the landlord's financial situation. So I'll give you, there was a question about this. Somebody sent the question. If I have a landlord that has no mortgage on the building, which I do, one of my landlords for my gym has no mortgage on the building. They can give me a lot more rent relief than a landlord who's got a larger mortgage on their building. Because at some point,
I've never met a landlord who wants to tell me anything about what his situation is. How are we going to know?
I asked the question. The other thing is I can look at a public record and see if they have a mortgage. I mean, a lot of this information. So listen, I have a number of brokers in my office who do investment sales, and they're pretty good at looking at a building and knowing pretty much what that building should cost to operate. I mean, obviously there's going to be a degree of inaccuracy, but they can pretty much within 10 or 15% say this is what it costs to operate that building. We can then look up online if there's a mortgage. It's a recorded document and estimate basically what that mortgage is. So we can kind of pro forma what that landlord situation is.
So you'll do that research, and then you'll present it to the landlord and say, I know your deal. I know what you can afford.
Yes. I just did that with one of my landlords. It was very effective. I said, this is the deal I'm willing to make. And he had no mortgage on the building, which helped. I said, I'm willing to pay you at least enough that you're not going to your pocket every month. I will cover what your operating costs are. This case, it was a condominium unit that they owned. And so it was basically their maintenance, their common area charges. And it was also what their taxes are. And again, taxes are public information. That's usually one of the biggest components of operating a building, that and the mortgage. So that information you can get.
What? Understood.
And also, listen, we have great relationships with landlords as brokers. We can get that information.
Right. What do you think now? And by the way, to the landlords out there, almost every landlord we've approached has been working with our clients. It's been a very different kind of negotiation than it was beforehand when we were negotiating leases in a non-wacky world. And so it's been good to see, and it's not getting us out of the weeds, but it's been helping. What do you think from a landlord's perspective? We know what our fears are. Our fears are we're never going to be able to reopen, or we're going to go out of business because the customers are never going to come back. What are landlords' biggest fears right now, today?
I've had some moments of absolute, and I'm sure we all have. When this started happening, I had moments of absolute terror about whether or not the buildings I own would survive what we went through. And what gave me a little bit of comfort, and this is why I talk about you need to have a business plan, is I sat down and created a lot of different scenarios about how we can approach this and how we solve the problem. My biggest fear is that my tenants stop paying my rent, because that's the whole house of cards. That's the foundation on which a real estate deal is built. It's on the rents that you can collect from your tenants. If too many of my tenants stop paying the rent, or get too much of a rent deferral or reduction, I'm in essence out of business. At some point, then my lender is going to step in and take over my building. I mean, that's my fear.
And do you think that lenders will do that? Do you think they have no compunction about going in there and just foreclosing?
Well, let's distinguish between different types of lenders. So I'm going to talk about basically institutional lenders, which are your banks and whatever, as opposed to, let's say, so what I would call private lenders. So if it's an institutional lender, they really do not want to foreclose. They do it if they have to do it, but it's not their business model. Their business model isn't to foreclose. So this is typically how it works out. Landlord gets into trouble, landlord talks to the lender, and they come up with some sort of what they call a workout, which is some sort of renegotiation of the terms of the mortgage. It might be, we'll give you some relief from the mortgage, but you've got to put another couple of bucks into the property. So often the lender will say, I'll give you relief, but I got to see that you put more skin in the game, which is sort of what I said. If I have a tenant who says they're going to put skin in the game, I'm going to be much more willing to work with them. So then you do the workout. Now, if the workout doesn't succeed, then a foreclosure action is commenced. Foreclosure actions, at least in New York, are very, very time consuming. And eventually, let's say you get to the point where your lender is about to foreclose, what can then happen? Well, what can then happen is the borrower, the owner of the property, files for bankruptcy. And now you have to go through a bankruptcy. So at the end of the day, a foreclosure process from day one until the owner actually the lender actually takes title can take 2 to 3 years and cost a significant amount of money to fight.
Jim, we have quite a few of our audience asking a question about finding out about these mortgages. Can you explain, just for the layman, I mean, I'm an attorney, we know how to do it, but for the layman, where do you find this out? You want to maybe talk about ACRIS or something like that?
Sure. So real estate transactions get recorded. Deeds get recorded. Mortgages get recorded. The city has set up a system called ACRIS, ACRIS, where you can go in and you can see the recorded documents that are recorded against a property. You'll see things like mortgages. You'll see deeds. You may see liens that are filed because those are public record. And you can get a lot of information just by going into that. The other tool that we use is something called Property Shark, which sort of is an aggregation software, online web-based software where you can go in, put in a property address, and you'll get lots of information about the property, who the owner is, who some of the other tenants are. Maybe if they filed, tax forms, you might be able to see what those tax forms are. You might even see what the income is for a building. So Property Shark, you have to subscribe to it and give you a tremendous amount of information. Again, as a full service brokerage company, we have access to a lot of different databases where we can get this information. And some of it is just by Googling. You Google an address of the building, you'll see the building was sold and they put a mortgage of X number of dollars on it.
I've had a couple of people also ask about Chapter 11 because it's a real possibility for a lot of our clients. If a tenant approaches a landlord with the threat of a Chapter 11, and a real threat, does that change the landlord's perspective on things?
I mean, it's always in the back of my mind when I'm talking about, talking to tenants, what is the likelihood it may actually go into Chapter 11? Yeah, so Chapter 11, again, adds a time frame to the whole process of taking back space if you're a landlord. Ultimately, if you know your tenant's going out of business and you want to take the space back and then they file Chapter 11 or Chapter 7, which is another form of bankruptcy where it's liquidation, that can add 6 months to a year in the process of getting space back. So if a tenant is actually doing some business but not paying rent, they might actually be profitable, and they'll try to delay the process as long as possible. So this is typically why, as landlords, we ask tenants to give us what we call good guy guarantees, which helps protect us against a tenant who then files for bankruptcy.
Let's talk about good guy guarantees for 1 second. The City Council has a bill that's out. John, I want to ask you about this first. There's a bill that was out. It's going to be going to committee tomorrow for a public hearing. And that bill basically says there's no more personal guarantees for commercial tenants who were affected by the COVID crisis. John, as a tenant, how do you think that would affect you if in fact that bill was signed into law?
Right. I think, well, I mean, I would be very surprised if it didn't have lots of teeth, but it essentially puts the landlord and tenant on pretty even ground in terms of the conversation on how to proceed. Because I think the loss to the landlord would be extreme in that case, which is why I couldn't believe that they would pass that without teeth. If you have to ask me, am I willing to go out of business because of this crisis? The answer is yes. I have to face that fact that we don't know when it's going to be over. We don't know what our income is going to look like, not to mention the idea that we're going to have to put capital in to restart, right? And if the capital in to restart is only going to benefit essentially my employees who will be coming off of unemployment in order to restart, and the landlord who by contract is owed rent, it doesn't make a whole lot of sense for me to go out on a raise when I don't have a plan of when it could be repaid. So if the good guy was released, we were released from our good guy, I mean, that forces both parties to the table in a way that I think that probably benefits both, because, at the end of the day, both are trying to achieve the same thing, which is to stay alive, though temporarily. I think in the conversations in the very human, to your point, David, really human conversations with my landlords thus far, we haven't really gotten to the point where we're talking turkey, but I do get a sense that they think that I'm negotiating, and the negotiation really is, this is the number that I can pay, right? And that number is probably going to be based on the amount of my income as a restaurant, right? I'm willing to get quite transparent. Not that I wasn't before, but I'm willing to get very transparent with my landlord so that they can see that this is not some sort of joke, right? And that I don't have sort of a ton of backers who are saying, never let a good crisis go to waste. I mean, this is literally the moment where we're willing to hand back the keys and deal with the good guy issues in order to fight another day. Versus, I think what I'm hearing from other landlords, and not you certainly, Jim, is that we're using this as an opportunity for future profits. It's just not the case.
Yeah. I would be surprised that if landlords are, I mean, I don't know how a landlord could think that way, but whatever.
Jim, what is your take on this bill, the city council bill?
I think at the end of the day, it might be unconstitutional. And so if tenants suddenly think they can basically not have personal liability, they might discover 2 years down the road, if it is deemed to be unconstitutional, suddenly they didn't get the relief they thought they got. So even if the law gets passed, there's going to be a high degree of uncertainty as to whether or not it's enforceable. The thought that good guy guarantees are going to level the playing field is absolutely true. But the other problem you have is there are going to be plenty of tenants who, because now they don't have liability, may decide, you know what, even though I don't think long-term I have a viable business, but as long as I don't have to pay my rent, I'll continue to operate because then I am profitable. And at some point, let the landlord spend 2 years trying to evict me. And then, but I will have made my money over those 2 years. I think that would be grossly unfair.
Do you think, are landlords talking about taking the city council proposal to the Supreme Court? Is that
it hasn't even been passed yet,
okay.
But they will.
They will. Here's a question for you from a viewer, for you, Jim. Is there something that restaurants can do to help push for temporary property tax relief for landlords? We want to unite. We want to help the landlords as much as we can. Is there something that the industry can do for landlords?
I mean, we are, and so the real estate board, which used to be a very powerful, influential lobbying group for landlords, certainly has approached the city about doing some form of real estate tax abatement. But then again, you got to look at it from the city's point of view. The city has a budget of over $90 billion. There's a projected deficit now, budget deficit of between $5 to $10 billion at the city level over the next 18 months. There's a $14 billion budget deficit projected for the state for this current fiscal year. 35% of the city's budget comes from real estate taxes. So can the city afford to do it? I mean, that's the question. So if the city cuts real estate taxes and now they have less revenue coming in. Where are the budget cuts going to go? What are they going to do? Reduce social services? Are they going to reduce funding to firemen and to police? Are they going to reduce funding to education? There's a huge ripple effect to all of this, and you have to think it all the way through.
What is the real estate lobby doing about this? Where are they? Who are they talking to, and what are they trying to get through?
So I'm not privy to the discussions, but I'm pretty certain they're probably talking to the mayor. They're probably talking to Corey Johnson, the city council speaker, and they're probably trying to see what can be done to minimize the damage to our industry.
And what do you think they're asking for?
I don't know. I mean, one thing I would be concerned about, which is unrelated to what we're talking about, is I imagine there are going to be a lot of lawsuits that come out of this where tenants, businesses are going to get sued by people who claim they got coronavirus because that business didn't take proper precautions to protect them. So if you have a restaurant customer that suddenly gets coronavirus and they come back and say, hey, you know what? You didn't protect me. Your waiter wasn't wearing a face mask. He wasn't wearing gloves when he served me, and I got coronavirus. I'm going to sue you. Every one of you restaurateurs have probably been subject to frivolous lawsuits. And quite frankly, I think the amount of frivolous lawsuits that have come out of this is going to be staggering. And I think it's important that both landlords and tenants lobby our electeds and say, we need protection from this. We can't make this a feeding frenzy for lawyers. That's my soapbox speech.
No, that's true. We've been saying that for years with all the employment lawsuits that are coming down the pipe.
Right, or the guy who walks around making 88 claims. There's a step up in my restaurant, I'm suing you.
Yeah.
I mean, it's ridiculous what you as tenants have to deal with.
Well, we do. John, I got some questions for you. We talked about 2008 and 1987, but you were around for 2008 too.
Yep.
And it's important to know how it affected the restaurants in the aftermath of that stock market crash. What happened to your restaurants?
During that time, we saw a thinning out in terms of the number of people that were willing to spend while they ate out. I think the difference between that time and this is in 2008, there weren't as many great options to be delivered. We're facing competition, and look, I'm a capitalist and I believe in competition. I haven't found a way to effectively deliver my food in a way that I'm totally proud of it, to go offline and just do that, right? And we all know that there's some future in that, and this may be a forced future. But in 2008, people still needed to eat out, and they just spent less and they went out less. I think that the advent of technology and being able to deliver a really great product into someone's house is the difference between then and now.
Yeah, I understand that. Moving forward, now that we are, now that we may reopen soon, what are you talking about? Because landlords need to understand this. How are you going to rehire staff? How are you going to rejigger your restaurant? What effect is that going to have on your revenue and ultimately on your profits? Let's just say, let's be magnanimous and say 50% occupancy.
Right. Well, let me start by saying we have investors in all of our restaurants, and I would be hard pressed to go to them and ask for a capital raise. I don't think that any investor who's smart would say now's the time. Okay, that's the first thing. The second thing is that the only way that I will reopen. So if PPP, if our loans come in, we will obviously take the loan and put those loans to work, which would include paying landlords something. Most important to me is to get my staff off unemployment and start to pay them, and hopefully and prepare for the next step, which is either reopening or reopening under a new model. There will be no profits, right? And I'm facing myself in the mirror every day, asking myself, what am I financing by going back into business? Who am I giving the money to, and is it worth it? And unless my landlords, and that's not just for the purpose of this this conversation, unless my landlords are willing to take the haircut that I am going to take, it doesn't make any sense, because my theory is that if it gets really bad, and I think it's going to get bad, and I execute my good guy or not, right? Maybe I can walk away. There's going to be no one who wants to pick up my restaurant and will rent it in the time that there's a recovery. And if there is a recovery, I'll be the first one in line to take my restaurant back. But the difference between executing the good guy and paying down that rent during that time, and the monies that it would cost to reopen into a place where we'd only be doing less than 50% likely of our revenue, way less, given that it will also be summertime, doesn't make a whole lot of sense. The calculus doesn't make sense. What's starting to make sense to me is execute the good guy, unless the landlord is really willing to become my partner, essentially, and become a percent of my top line.
Jim,
In essence, take a big break and let the space sit on the market and see who would be willing to take it, right? I have to believe, based on my experience, I have the best chance of making every one of my spaces work. At which point, the same amount of capital that it takes me to restart now will take me to restart then, when we can actually have density inside of the restaurant.
So let me ask John a question.
Yeah.
So you said if you went back to your investors today and asked them for more capital, they'd probably say no. But what if you went back to your investors today and say, listen, I spoke to my landlord, and my landlord's willing to give us significant rent relief, maybe 50%, maybe even 75%, until we have the ability to reopen, and then it's staggered, because we all understand that when you reopen, you're not going to go back to 100%. It's going to take a year or two. But my landlord's willing to structure something to take that into account. Do you think then your investors might be willing to put more money into the deal? Because that's critical.
Yeah, I mean, we don't yet know. So it's a matrix of time is a piece of this, right? But it really is based on what the landlord is willing to do in terms of taking a haircut, just like us.
So as a landlord, if it
has to be a percent, because every other expense that we have in a restaurant is based on the amount of a business that we do, right? So my labor, in theory, is a percent of the top line. If the landlord is willing to also fall in line with that, then I would be willing to go and raise money and make a go of it.
Here's what this is a natural time to start talking about this. I wanted to talk about it later, but let's talk about this percentage rent lease and what this even looks like. We've heard a lot of talk, including from me, about the way forward being a percentage rent deal with the landlord. It becomes a partnership, and the landlord basically, until things normalize, becomes the partner of the tenant. And we talk about a percentage rent deal of, let's call it 10%. It would keep us in business as tenants, but I do want to hear from the landlord as to how they feel about that. And also, now that I'm understanding a little bit more about your world, how that affects your ability to refinance your mortgage.
Interesting idea. So when I was approaching one of my landlords for my gym business, it was very much along the lines of a percentage rent. And the way percentage rent works, just for those who aren't familiar with it, basically a lot of percentage rent deals are, you have a base rent and then you pay a percentage of your rent over a threshold amount. And usually the threshold amount is the percentage divided into the base rent. So if you're, whatever, that's the formula. But if it's a straight percentage rent, this is the issue that a landlord will have. And a lot of it really depends upon the landlord. First of all, again, if it's a significant tenant to the building and there's a mortgage, the landlord's going to have to get the lender to go along with it. The likelihood is there's a covenant in the mortgage that prohibits those type of amendments to a lease, because it may diminish the value of the building significantly, because there's no certainty as to what the amount of rent that's actually going to get paid. Nobody can predict it. And one thing lenders like more than anything else besides getting paid is predictability. So that becomes a problem because of the lenders. But let's assume that you can get around the lender. It may be a problem for certain landlords just because they're not sophisticated enough to be able to deal with it. So I think a mom and pop landlord would have some issues with this because one, they're not going to understand it. They're not going to understand how to enforce it.
How do you explain it to them? And let me also say, I've had a few people telling me 10% is crazy, 6 to 8% is more in the right range. So
Right. So I have a couple of brokers who do they used to do a lot of shopping center deals where they had percentage rent clauses where they were pretty typical. And what I was told for restaurants, I think the range is between 6 to 8%, but okay. You know, a lot of the mom and pops are going to be worried that the tenants are going to rip them off. They're going to steal. You know, they're not going to report it correctly. There's no mechanism for a mom and pop to do an audit. I mean, they're just not in a position to be able to really deal with the percentage rent clause. But then the workaround, when somebody says, well, how does that impact my ability to get a mortgage in the future? It can have a very serious impact because, again, there's a lack of predictability as to what that rent stream is going to be. But the workaround is you could say, listen, let's do a percentage rent clause for the next 2 years, because that's what we estimate that it's going to take for us to get back to some semblance of normalcy. And that's an assumption, but let's assume it's 2 years. Then what we can say is after 2 years, we'll reset a base rent based upon what your gross sales have been. And we'll basically convert the percentage rent deal into a deal with base rent and then percentage rent. And now by having a base rent that's set, that's predictable, then it makes it easier for the landlord to get financing. John,
what do you think about that idea?
I mean, it sounds to me like the only way it's going to work. Yeah, I mean, the short answer is that two years is probably the right amount of time for the runway, let's say, the uncomfortable runway between the reset and stabilization of some sort. So I think the 2 years is correct. You know, the question is, you know, how does a mom and pop, right, which is a lot of our landlords, how can they look in, right? I mean, you know, we file taxes, we pay sales tax, right, which is a percentage of our sales, right? And almost all of us, I would say probably all a couple hundred people that are on this have some sort of POS mechanism with the look-in, right? There's a way that we can allow the landlord to look into our sales. No one pays cash anymore, and everyone knows that, right? So everything is reported. There is a mechanism for them to feel comfortable around the amount of revenue that we're taking in, the gross. I wouldn't be too worried about that part. The question is, can they wrap their head around changing their habit, which is, you know, the tenant has their business, I have my business. You know, what we're asking is to coalesce between two businesses and intertwine.
So Jim, you're feeling that landlords might be receptive to something like a 2-year rent percentage deal, and then what? And then we're pegging the rent as usual after that 2 years?
Yes.
And how are we coming up with that number?
Basically look at, let's say, the average gross sales over a period of time, and then formulating, you know, that's basically annualize that and say the tenant can pay, you know, 6 to 10% of that amount. It's a negotiation.
Interesting.
Doesn't that also benefit the landlord to have a couple of years for the economy to recover, to get some stabilization, so that if, let's just say that at the end of that 2 years, they're like, this is a non-starter, this isn't going to work for us anymore. They now have time to, you know, market the space, look for a new tenant, create a key, perhaps be able to sell them the existing restaurant for key money. Doesn't it benefit the landlord also to get a little bit of space between this mess and some sort of horizon?
You know, possibly. But again, you know, a lot of it depends upon what the landlord's immediate needs are. I mean, they have to be able to survive for that 2-year period of time. So if they can survive that 2-year period of time, then yeah, maybe they are better off having that kind of runway in order to see, you know, what it's going to look like.
Well, let's talk a little bit about what the future does look like.
David, may I interrupt really quickly? Because I just want to ask, I want to try and wrap my head around this, because what you're saying, though, is that you would rather have no one for a couple of years than someone who's paying you a base something.
No, I didn't say that.
No, in that scenario, I'm not accusing you. I'm saying in that scenario, you're saying that you would rather have no one in the space paying a percentage of nothing than someone.
Again, it depends on who that someone is and what they propose to me.
Yeah.
Again, I go back to, I need to feel that this tenant is willing to put some skin in the game and have the capital to survive, which is why I talked about having a business plan. So I would sit down with my tenant and say, what's it going to look like if you can only do 25% of your typical business for the next 6 months? How are you going to do that? And then if it's 50% or 75%, how are you going to get over that hurdle? Even if I do give you rent relief, how are you going to do that? Who's going to put up the cash to allow you to do that? Because it's not just a question of rent relief that's going to get you through this. It's also having some capital behind you to help cover maybe some operating losses or help you basically turn on your lights. We all know that on day one, when they say go back to business, it's not just stepping into your space and turning on your lights. There's going to be some startup costs that you have to pay for. I need to understand as a landlord how you're going to make that work.
John, can you talk a little bit about that? We haven't touched on this yet. There's going to be costs associated once we reopen our doors, right? We have to rehire people. We have to refurbish our place so it comports with the law. What are you looking at as an average, do you think, for a restaurant to reopen as far as costs go?
Yeah, I mean, we've started to game it out. I mean, the answer is that we don't know, right? We're going to need to get current with rent. We assume that there's going to need to be some sort of conversation where we get current with rent, right? So that's an initial capital outlay. We obviously are sitting on a mountain of debt, right? All the food that we had in our walk-ins is no longer there. The alcohol that we ordered is sitting in our liquor room right now. So we're going to have to restart with our vendors. Right? We're going to have to go through some sort of training. We're going to need to refile our handbooks to make sure that the handbooks are current with what will be new guidelines. And then there's the general kind of upkeep and at the bare minimum, I'm saying that's $50,000 if you take the landlord piece out of this. And I think we're maxing out at around $100K per business unit. These are obviously, over 50 employees and that sort of thing. In the short term, the PPP will simply be to pay our employees and pay our utilities. That's not really the same as restarting your business and getting your inventories in place and getting your vendors whole. But Jim, I just wanted to go back to one thing. I mean, not to weaponize your words, but just the idea that the landlord is asking me, "What's your plan?" Is quite comforting. I hope that happens, right? I'd love to be able to show them a pro forma, my old pro forma and my new pro forma, and how they differ, right? And the drastic measures that we're going to have to take, again, just to stay alive. But the issue is that what I'm having a hard time wrapping my head around is the idea that a landlord is going to let me walk away because I'm scared of what the future looks like, versus really trying to get into the weeds with me. Either way, you're going to have an empty space that you're going to have to pay the taxes on, right?
Correct, but at least if it's empty, I can market it and try to find somebody else who might want to take it over.
Is it more effective to market when it's empty or when it's operational?
That's a good question. I don't know. If I had to guess, I would say if it's empty and as long as it looks okay.
Right.
Because often, trying to market space that you don't have possession of, and I'm trying to find a new tenant. The tenant says, well, when am I going to get possession? I said, well, I don't know. That's kind of a hard sell too. I think they're going to be, there is going to be, I hate to say it, but there are going to be operators out there who are salivating at the prospect of taking over existing restaurants that where the restaurateur has invested significantly in their build out, because the next person in doesn't have to spend that money.
You're wrong.
No. We have clients already that are approaching us.
They're testing the waters. Until we get a vaccine, no one wants to own a restaurant. It's that simple.
Let's move on for a minute. That was a nice spirited little debate there. Jim, talk to us and the viewers about the retail landscape in New York City over the next couple of years. It's important that we can at least try to predict what's going to happen, because it's going to inform how we negotiate with landlords. What's going to happen over the next couple of years? Are we going to see rents plummet?
Yes. So I canvassed a couple of people that I know to get sort of a consensus as where we think rents are going to be. And we sort of distinguished between sort of Midtown Manhattan and the rest of New York. So Midtown Manhattan, where rents are much higher than they are elsewhere, rents will come down more than in terms of percentage than they will elsewhere. So it wouldn't be surprising to me if we don't start seeing rents in Midtown Manhattan go down anywhere from 30 to 40%. And then outside of Manhattan, probably anywhere from 15 to 25%. You know, some of the smaller neighborhoods that are very much real neighborhoods, I think are going to be less impacted than I think places that depend more on tourism, because obviously tourism and travel is going to be hammered for many years. People aren't going to be so happy to hop on a plane or get onto a cruise liner to come to New York. So yeah, so I think there's going to be a big difference between Manhattan and the outer boroughs. And listen, it's not just a function of this. I mean, listen, retail was being severely impacted for the last 2 years as a result of the internet and online sales and so forth and so on.
So if we're talking 15 to 40% as far as a decrease in rents go, do you think landlords understand that? And do you think landlords are willing to come back to the table and renegotiate the rents that are currently being paid?
So we've had some conversations with landlords where they get it and other landlords refuse to acknowledge it.
But you think most landlords get it?
I don't know. I don't know. I don't know. I mean, listen, has anybody tried selling an apartment in a down market? You don't really know what the number should be. And you start, they call it, you start chasing a number you don't really know. So, some landlords might think 10 or 15%. It's all over the place. First of all, nobody really knows. I'm giving you my estimate is what other people are saying, but we don't know.
So we have a lot of different things in a lease. It's not just rent, right? We have the length of the lease, we have security deposits, we have taxes, we have abatement periods, we have personal guarantees. As a landlord, if my clients are coming to you or I'm coming to you tomorrow and I'm saying, look, we need to renegotiate this lease because things have changed drastically and they're going to continue to change. Of those terms, of those things in the lease, what are you most apt to be open to changing? And I'm going to assume that the rent is the last and the thing you're least interested in changing. But what about the term? Are you willing to give a longer lease? Are you willing to take out that personal guarantee?
So going back to my premise, I want to see a tenant who's willing to put money, into their space. I can't expect the tenant to do that unless they have a longer term lease. It just doesn't make sense. So, if the tenant has 2 or 3 years left on a term and they come to me and say, listen, I'm willing to do X, Y, and Z and spend some money to open up. It's going to cost me, $200,000 to do this, but I need a longer term lease. Absolutely 100%. I'm going to be very sympathetic to that argument. I'm going to be very, very reluctant to let anybody off a good guy guarantee. And in fact, it'd almost be a deal killer for me.
And why is that?
Because I can't afford to have a tenant doing business and not paying me rent for 2 years, which is my risk with not having a good guy guarantee.
And why do you say 2 years?
That's been my experience. If a tenant really wants to play the game, first of all, right now there's a moratorium on evictions. Well, nobody's open anyway. But they're also talking about having a moratorium for a much longer period of time. The process of evicting a tenant in New York is a very long and complicated and expensive process. And the whole reason why we have the good guy guarantees to help deal with that issue from the landlord's point of view. So if a tenant really is sophisticated and hires a top-notch lawyer, they could easily prolong the process for at least a year pretty easily. And then if they want to file a bankruptcy, it could take another year. So it could be a 2-year process. And it's a risk I'm just not willing to take.
Mm-hmm. John, is there a way from a tenant's point of view around this idea of the guarantee and of those different items that I've listed, those different terms of a lease? What's interesting to you to renegotiate from a tenant's point of view?
Yeah, I mean, I think we're talking about a short-term and long-term plan, right? What does it mean to own a restaurant in the next 6 months, 12 months, 18 months and beyond, right? And I think, you know, for once, the landlord and the tenant are aligned in that we have to get through this very difficult period. And I understand Jim's point of the idea that if the landlord is really going into their pocket to pay, you know, the sort of the delta between what the rents were going to be and what they are now, you know, so should the tenant share in that downside. I guess what, you know, the lease terms and the good guys and all that sort of thing, I mean, those are all secondary to me, right? I mean, this is really a short-term plan, right? Between now and the time that there's like a crazy amount of antibody testing or a vaccine, that's what we have to kind of figure out, right? Because that's when tourism starts back up. That's when people feel okay riding subways. That's when construction can restart, even though, you know, they're going to do it sort of in a small way in the next couple of weeks. For me, that conversation with the landlord is, how do we get through this really hard time together? And that has to be around the idea that what I think to be the case, and maybe I'm wrong, is that the landlord is worse off by not having me there than helping me through this really difficult time to see if there's a way for us to come to a different agreement later.
And Jim, you would say yes to that depending on who the tenant is, right?
Correct. And I'll go back to the good guy guarantee. There's one thing I might consider as a landlord on the good guy guarantee. So good guy guarantees often have a provision that says before the guarantor can get off the hook, the tenant has to give a certain amount of notice that they're closing. So in essence, what that's really saying is it's almost a penalty that if it's 6 months notice, you're going to wind up paying 6 months of rent to get off the guarantee. What I might be willing to do as a landlord is just shorten that notice period. Because at the end of the day, again, what I really want to protect myself against is that wise-ass tenant that's going to stay in that space and conduct business and not pay me any rent for 2 years. I've had that before. It happened to me back in the 1980s and early 1990s. And it's a terrible situation from the landlord's point of view.
I can see how that'd be frustrating. Have you ever chased anyone on a good guy?
Yes.
Been successful?
Yes.
You can be successful. That's for sure.
It depends on the amount. I mean, am I going to chase a guy for $10,000? No.
Yeah.
And a lot of it, I got to tell you, I'm a human being. Piss me off enough, and I will chase you. Treat me honorably, and I'm more likely to be more accommodating. But that's because I'm more of a, you know, I'm sort of a quasi mom and pop. Relationships mean something to me. I can't tell you that an institutional landlord's going to look at it that way. They might a little bit in terms of how they approach you. But relationships matter in this business.
Good. John, at this point, well, John, let me ask you this. If a landlord were to lose a big part of her tenancy, how would they manage this? What does triage look like for landlords at this point? Let's just say you have 30 commercial tenants and 15 of them tell you that they're leaving. How do you triage that?
I might not be able to. You know, if I have a big mortgage, I'm not going to be able to triage it. I may have to try to work something out with my lender. And so a lot of it depends upon my relationship with my lender. So if I have a lender that I've done business with for many years, they know who I am and they feel comfortable that I'm a good operator, I'm not going to steal the money and just put it in my pocket and not pay my lender, they might be more willing to work with me to try to keep me alive. But if I'm a small mom and pop, they may not cut me any slack. And the risk to a tenant, by the way, don't think that if there's a foreclosure, it's riskless to the tenant. Tenants do have exposure if a lender comes in and they foreclose, because unless you have what they call a non-disturbance agreement, a lender has the right to dispossess tenants.
Right. Most leases do have those non-disturbance agreements, by the way, but yes, you're right. John,
Well, do you get that generally you find on your leases?
yes, we do.
Okay, I mean, with an institutional landlord where you're not a big tenant, you may or may not get it. A mom and pop, you ought to be able to get it. But sometimes if you're not represented by an attorney who knows what they're doing, they may not even ask for it.
John, I want to ask you a couple more questions. Then we're going to take some questions from the viewers. If you have to sit down tomorrow with your landlord, now that you've heard what Jim has to say, and we understand the landlord's perspective a lot better than when we started this seminar, what are you sitting down and what are you offering? Right, you've got how many places now? 3, 4 places?
Yeah, that it's a mom and pop. Well, ours mom, two in New York City, Nick's and the Loyal. And Jem, thanks for, I mean, I really, David, I'm sure you asked a lot of people, and Jem was like number 12 on your list. Just kidding. No, I really appreciate you giving us your
You're scraping the bottom of the barrel.
Really, it's like no one else was available. They're all busy.
No, I will tell you, I asked a lot of landlord attorneys, and they all said no.
Right. Well, thank you for your honesty, and this was really, I mean, I've got a page full of notes that I really do appreciate it, because the unknown is almost scarier than anything in this, and I do appreciate you being honest, and I think there's more questions than answers in many ways, because a lot of the third relationship is the lender, and last, which is not much of a relationship, is the government, federal government, which hasn't really stepped up yet. But having an understanding of the pressures that they're under, and being able to ask the right questions, I think is the point now. I asked both of my landlords, what my carrying cost was and where I sat in their portfolio. Neither of them were really forthright. I didn't expect them to be. But I'm now not really in the conversating mood. I'm in the demand mood. This isn't, I would rather walk away with my shirt still on, so that I can go back into business when this is over, than continually roll the dice on the unknown. I think that's just a bad bet. And, my investors will lose their money, and my employees will lose their jobs, and, my little community will be a worse place for it. However, I'll live to fight another day and be able to go back into business when there is business to go back into. And I hope that my landlords will be able to understand that this is not, we're beyond tactics now. There just isn't a way for us to survive unless they come to our level and understand that this is not about making more money, as if there was a lot to be made in the first place.
So I just had 3 very successful negotiations with my landlords to get relief. And what made it successful was basically, I said to them, it was basically desperate. If you don't give me the relief, I'm out of business. It's much easier. I mean, I hate to say this, it's much easier to negotiate when at the end of the day, you could just close and go out of business. And if you can convey that convincingly to your landlord, it's a very compelling argument.
John, I have a question from the great Peter Hoffman, who we all love and miss very much. And his question is, are you considering bankruptcy as protection to keep moving forward, not to walk away?
No.
And why not?
That would be, for me, that would be the last line. I would rather borrow against future earnings than go file any chapters or bankruptcies. For me, that's the last line of defense. And it's not that, I think that credit is going to be more powerful in the future. And I need to be able to maintain that credit now. And I'd be willing to go in the hole deeper in order to maintain credit.
Yeah, I think the bankruptcy issue, you got to remember, if you're going to go back into the market and you want to be in business a couple of years from now, if you have a bankruptcy on your record, it's really going to hurt you in terms of your ability to get financing and maybe have landlords talk to you. The reason why I think a retailer would do a bankruptcy right now would be if you have multiple locations and 80% of them are really good and 20% aren't, and you want to get out of those 20%. So a lot of retailers file bankruptcy, particularly the nationals, is basically to get out from under bad leases.
Jim, I have a question from a viewer, and she says, how do you recommend we go about proposing the percentage rent to the landlord? Is this something that ought to be handled by a lawyer, or is a personal approach better?
Again, a lot of it depends upon your relationship with your landlord. If the landlord and you had a conversation with, I would suggest having that conversation with the landlord. You may want to talk to your lawyer ahead of time, or maybe do an accountant to understand this stuff ahead of time, so you understand the nuances to it and what you should propose. I mean, I don't want to insult lawyers, but I don't necessarily find lawyers to be the best business people.
Well, that might be true for other lawyers, Jim.
Right.
We
Sorry.
tell our clients to have an initial conversation if you have a good relationship with your landlord, just to kind of test the waters. And then if you start getting into a deal, then you should call your attorney.
Right. Or quite frankly, listen, if you had a good broker who represented you when you did your lease, maybe having the broker reach out to the landlord.
Jim, we have a lot of people who want, you brought up some good ideas. And I think if people could leave here with anything, it's this percentage rent idea that you had, and with John. And it wasn't just straight percentage rent. It was percentage rent. There was a base. There was a pegging of a rent down the line. Can you try to encapsulate that again?
So what you would do basically, I'll try, I didn't think it all the way through in terms of exactly what it's going to look like, so I'll think out loud. You need to come up with a couple of different components to the formula. So the first thing is you got to think about what the percentage should be. Then you talk about how long this is going to last before you establish a base amount, base rent. So talk about a time period. And then you have to determine what numbers are you going to look at to help determine what that base is. What gross rent, what gross sales numbers are you going to look at? Do you look at like the previous 1 year? Well, the landlord might say, well, the previous 1 year probably isn't very good because you're still ramping up. So maybe we have to, finagle that number, but it's a discussion to come up with the formula. So you need to know the following. You need to know what your percentage is going to be. You need to know basically what gross sales numbers you're going to look at to determine what the baseline number is going to be. And then you determine what your base rent is going to be. And then you determine if you're going to pay a percentage rent over that base rent. Now, if your base rent is pretty full, then you're not going to pay anything above that in terms of percentage rent. But if the landlord says, listen, I don't feel comfortable with this base rent is really what the rent should be, but we don't really have the numbers to justify a higher number, he may say we still want to have a percentage rent component to protect them against possibly having set a base rent that is too low. That's going to be the landlord's concern, is that we're going to set a base rent that's too low, and how do you protect them against that? Which is why to have a tenant then pay a percentage over that base amount.
John, do you think you can translate what Jim said into
can you speak landlord, John?
Into a language that maybe we can understand? And let's do a little play acting and pretend that Jim is the landlord and that you want to approach him with a percentage rent. How do you think that might sound? What might you say to Jim?
Oh, I fell asleep. Sorry, I missed that last part. Yeah. Okay. So play acting. I didn't know that was going to be part of this. Okay. Cool. So yeah. So I think first in describing the dire straits that we are in, right? We have we have credit with all of our vendors, and most of them are between 30 and 90 days out, and we're sitting on a pretty decent amount of debt. We owe you a number of months in rent, and we'd like to come to terms with that, and look forward. What we would suggest is asking you to look at our revenues, what they were and what we believe they will be, and being able to derive a place that you would be comfortable for us to carry on for the next 12 months. And yeah. There is no possible way, I'm telling you, and I just, if I put a percent that I'm comfortable with to the numbers that we are forecasting, that any landlord will say yes to that. I just can't see it, right? And I think unless a landlord can really wrap their head around how bad this is, and the fact that there's no one standing in line for any spaces right now, I can't imagine a landlord would be able to say yes to the kind of numbers that I'm suggesting that it's less than 30% of what they were making.
Here's another question. This is for you, Jim. Do you have any advice for those who are currently in development of a property mid-construction. There's no track record of sales, and the crisis is eating through abatement as the world stops. Both landlord and renter have invested a great deal. Would the landlord have any tolerance for extended abatement or renegotiation of the lease?
Whoa. So I think you're talking about a restaurant that's being built out. You know, let's say you're halfway through construction and whatever. So I'll tell you what my concern is going to be as a landlord, at least the way I'm going to look at this. The last thing in the world I want is a half-built restaurant in my building. And with the possibility that now contractors aren't getting paid and liens will now be filed against my building, that ultimately, if the tenant doesn't pay them, I become responsible for it. And if I have a lender, if the lender sees liens on my building, my lender isn't going to be real happy either. I'm going to have to try to work something out with that tenant to keep them alive and see if they can complete the construction. Now, what's going to be important to me is understanding if the tenant, if I give them the relief that they need, is whether or not they will be able to complete construction and pay for it. Because if they can't do that, then I'm wasting my time. So to me, that's going to be, where are you going to get the capital to pay for this?
That's the question.
Yeah. Are your investors going to put up the money? Can you borrow the money somewhere? Where's the money going to come from?
Another question is, doesn't it look bad for a space or a landlord if a restaurant was there and then went out of business when they're trying to market it to a new restaurant?
It looks particularly bad when there have been multiple restaurants that have gone out of business in a location, because then I think restaurateurs tend to look at it as being cursed. But if it's, you know, it happens once, probably not.
John, how do you feel about that?
Yeah, I mean, I think given this time, I would love to talk to the restaurateur that right now is looking for space and believes that they're going to be the one that's going to figure it out. I'd love to talk to that restaurateur.
Also, I'm sorry, keep going.
Please.
So I think the restaurateurs, so we haven't really distinguished between the type of restaurateurs. So John, correct me if I'm wrong, but you're basically, you're serving quality food as a sit-down experience and so forth and so on. There are other restaurants that aren't sit-down restaurants. So you have the dig-ins and whatever, where people come in, they go down on an assembly line, they pick up their food and whatever. I think those restaurants will come back a lot faster than the fine dining restaurants, because you're not going to have a lot of people crammed into the space. They're in and out very quickly. They're not going to be impacted as much by social distancing. And I think those are going to be the tenants who are going to be prowling and looking for new locations, because I think they're going to do much better in the short term than the fine dining restaurants.
John, I got a question for you. John, I'm a huge fan of The Loyal. How do you feel about ghost kitchens and doing just delivery service? Do you think that's going to be a huge trend in the industry?
I mean, certainly delivery is the future for all of us, right? We're all going to have to wrap our head around what it looks like to try and serve a quality product that gets into a backpack and travels for 15 minutes before it hits a person's table. None of us deny that has been in front of us, and I don't think I in particular was more interested in exercising the thing that I'm trying to be an expert at, which is sit down restaurants. We're going to have to shift our model. The idea of a ghost kitchen is I've never seen anyone really succeed on a level, right? I've seen it work, but I've never seen it, kaboom. I remember when David Chang, what was the name of that one again?
Ando.
I mean, I thought it was quite good. I thought the food was quite good. I thought the packaging and the whole materiality was really good. Unfortunately, it just didn't land. Was it the wrong time? Perhaps. Maybe it was a little bit too ahead of its time. But maybe also, people want a restaurant experience in their house, and that's something that we're going to have to deal with. I'm not totally certain that I'm ready to jump into that business with both feet, right? If I have to do it to stay alive, I will. But that's the level of expertise that others are very good at already, and I have to focus on just that to be excellent. I'm not totally certain I'm ready to do that.
I got another question for you, John. When allowed to open at a reduced capacity, do you believe restaurants will try to increase menu prices to help them survive? If so, do you think customers will be receptive to this, or would this exacerbate the issue.
The question is, what do our menu prices look like coming out of this? Is that?
Yeah, are you going to have to raise them? And if you will, can you? Will customers
way.
deal with it?
The $20 cocktail is dead. It's dead right now. It's not coming back for a while. We're in an economic crisis as well as a health crisis. Together, that's not a time to raise your prices, right? Competition is going to be around how can I dine and be safe and not break the bank?
Another question for you, John. Sorry, Jim. We love you, but the questions are coming in for John. What about very small bars, one that offer limited food? What does the future look like for them with social distancing? Will most of them just go out of business?
I think it all has to, I mean, yeah. In New York City in particular, large urban areas in general, you know, you can have a great cocktail in many places now. You can have great food in many places now. But to put together vibe, lighting, music, good food, good music, did I say that twice? Good design, it's not as easy. And that's the reason that people go to restaurants, right? And they probably scale out all of those things that are important to them. Some are and others are not. But as a group, that's why you go there, right? And to be in the middle of energy. I don't know how a bar where you have to sit 6 feet from each other, or where the bartender has to wear a plastic mask as he's shaking your cocktail. It's not a bar anymore, right? That's a food pantry. That's a soup kitchen. It's no longer the thing that it originally was. Not to say that we won't try and open if we can, but it's no longer the same thing.
What do you think about dining rooms versus al fresco dining outdoors? Which do you think will come back first?
It's a science question. I mean, I think al fresco gives the maybe the perception that it's safer. I have no idea. I mean, I heard about something with air conditioning. I mean, it's a science question. I don't know.
Okay. For you, Jim, is there really a point to the smaller business owners scraping through and putting in additional capital to stay open if, based on their historically slim margins, they have no way to recoup their losses?
Yeah, if I were them, I wouldn't reopen.
John, you feel the same way?
I do.
John, someone asked you, could picnics be a trend?
Yeah. I mean, why not, right? I mean, the idea of takeaway is that's folks like Dig In. That's exactly what they're selling. It's just, perhaps it's prepackaged. Yeah.
Do you think
or Zoom dinner parties?
Right.
John, do you expect that staff will be required to wear masks and gloves when you're allowed to reopen?
Yes.
Do gloves even work? What is the point of gloves?
That's a good question. I mean, I think that they'll be required by the municipalities for gloves and masks for all. I think that we'll go with a lot of paperless options, payment options that don't require a person-to-person transaction. That's not a restaurant anymore. It's not the same, right? I think we're all going to have to change. The question still remains: is it worth it, right? Is this the time to try and throw your line in the water to maybe survive? I'm not certain.
We're going to wrap it up, folks. Jim, do you want to say a couple of parting words?
Yeah, I think landlords and tenants are very much in this together. And the approach needs to be, we have a problem, both of us, and we have to come up with a solution that works for both of us. It can't be an antagonistic relationship. It can't be me against you. It's got to be, we've got to work together to solve this problem.
Thank you. And John? Yeah,
amen. I thank you for doing this, Jim. Again, I really appreciate the information that I certainly took from this. I also think that, what feels like a crisis today, I mean, I think everyone has been through stuff. you know, this will become a memory at some point. But what cannot be removed from you is talent, drive, hard work. And that's the kind of hospitality motif that we all walk and talk. I feel like if this is an extreme amount of pause, if this is a couple of years of all of us having to scrape it together and get back to work at some point, we'll rise again, and maybe that's okay. I'm certainly helping my team come to terms with it, and myself as well, that, you know, losing a restaurant isn't the same as losing the talent that made the restaurant in the first place. And that's something we might just have to come to terms with.
Well said. Well, thank you both, John Fraser, Jim Wacht, Dana Lappin, for putting this together. Everybody for the great million questions that you sent in. I'm sorry I didn't get to all of them. I will tell you.